Hey everyone, welcome back to Corporate Decoder. We are diving into some juicy executive compensation changes today that will make you think about how companies try to keep their top talent happy and on board. For the long haul today, we are unboxing a fascinating report from Freshpet Incorporated Form 8. A document that tells us about important events happening at the company right now, and it turns out they have been busy making some significant arrangements for their chief operating officer. So what is this all about? Well, the date here is the 8th of December 2025, and Freshpet Incorporated is filing this report because they are making a big move regarding their chief operating officer, Miss Nicola Beatty. This section is all about what happens with leadership and their pay, or as they call it, compensatory arrangements of certain officers. Basically how they pay their top brass. Now, the big news is that the Compensation and Human Resources Committee of Freshpet's Board of Directors approved something called the 2025 Retention Grant for Miss Beatty. This grant is designed to keep her with the company, and it comes in two parts: performance-based and time-based awards. Why are they doing this? They explain that Miss Beatty joined with an initial equity package that was supposed to keep her around for a few years, but because of market changes, the value of those original awards dropped considerably, leaving her with not much unvested stock to act as a strong incentive. To stay, the committee is basically saying they need to make sure she feels valued and that her interests are tied to the company's long-term success and shareholder value. And the numbers here are pretty eye-watering. The grant date value of this entire award is a staggering $175,081,972. This is a huge sum of money and shows how much Freshpet values having Miss Beatty in her role. She is receiving 13,858 restricted street OC units, or RS, that will vest based on time. This means she will get them over a period of time as long as she continues to work at Freshpet. And another 13,858 RSs that are tied to performance. These are even more interesting because they only pay out if the company hits certain financial targets. So for the time-based RSs, she will get them in two equal chunks, starting the 3rd of January 2027. This is pretty standard stuff, a reward for sticking around. Now, the performance-based RSs are where it gets exciting. Half of these will vest if Freshpet achieves its 3-year cumulative net sales goal from 2025 to 2027, and the other half will vest based on hitting an adjusted EBITDA margin goal. Over the same period, adjusted EBITDA margin is a measure of how profitable the company is after certain expenses are removed. It tells you how efficiently they are running the business. And here's the kicker: if they only hit the minimum acceptable target for these goals, she gets 80% of those performance shares. But if they absolutely smash it and exceed the maximum goal, she could get 120%. That means there is a big upside for her if the company does exceptionally well, so she is heavily incentivized to drive sales and profitability. One more thing that is really important is what happens if the company is bought by another company, or if there is a big change in leadership, if Miss Beatty is terminated without cause. After such a change in control, she gets all of her awards immediately. This is often called a double trigger acceleration, and it is a common feature in executive compensation to protect executives in situations outside their control. So what does this all mean for Freshpet? Well, it shows they are really focused on retaining key talent, especially at the executive level. Losing a COO can be incredibly disruptive and costly, so investing this kind of money in retention makes strategic sense, especially when market shifts erode the value of previous compensation packages from a Warren Buffett perspective. This looks like a company that understands the value of its people and is willing to pay to keep them engaged and aligned with the company's vision. They are not just throwing money at the problem though, they are tying a significant portion of it to performance metrics like sales and profitability. These are the true indicators of business health. However, there is always a risk when you award such large sums tied to specific performance targets. There is an implied pressure to meet those targets, which could potentially lead to short-term decision-making or even aggressive accounting practices designed to hit those numbers. It is something to watch as Freshpet moves forward. The company is clearly aiming for strong long-term growth with these performance-based awards. They want Miss Beatty to be thinking about the next 3 years and how to build the business significantly. It also signals a stable leadership outlook, which is generally positive for investors overall. This filing tells a story of intention. Executive retention: a company proactively addressing a potential retention risk by offering a substantial incentivized package. This suggests a focus on stability and growth in the coming years for Freshpet. Alright, that is our breakdown of Freshpet's latest filing. What is your take on these executive compensation strategies and what they signal for the company's future drop? Your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.